Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantac Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. And certainly the stock market activity on Friday would suggest that investors remain incredibly concerned about how geopolitical events in Russia and eastern Ukraine are playing out in the markets. The tensions that were created on Friday and the news flow that we got midway through the afternoon created a 200-point decline in the DAX in just a matter of minutes. And certainly that would suggest that volatility remains very high in these markets. We saw a big flight to safety. Assets like the yen and also gold benefited on the back of this news flow, and also these stock markets came significantly lower as well. If you look at indicators such as the VIX, you can see that certainly on Friday there was a big 8% jump in that volatility index, which suggests that there are still some concerns in the market. Now, the VIX index has fallen considerably since the highs that it saw a few weeks back, but certainly volatility remains elevated at the moment. And these geopolitical tensions certainly remain a big concern for investors. Now, moving through this week, we're looking towards this Jackson Hole symposium that sees the central bankers of the world come together in a conference, and we get some big speeches out of the central bankers. And this week you've got Janet Yellen and Mario Draghi both speaking on Friday. Now, in 2010 and 2012, Ben Bernanke used the Jackson Hole Symposium as a platform to lay out changes in Fed monetary policy. Now, we're not expecting Janet Yellen to do anything too significant on Friday, but still there is the possibility of her doing something. But also we've got Mario Draghi giving his first big speech following on from the big disappointment that we saw in the European growth data recently, and also obviously with the German economic numbers disappointing as well recently. It sort of adds a little bit of spice to what he could come out with. So possibilities of obviously quantitative easing being mentioned are reasonably high, but we'll wait and see how this one pans out. But certainly the market will be looking towards these two key speeches on Friday as a big driver through the week. Okay, so where does this leave the financial markets? Well, you've got on the FX side, you've seen that the dollar has just consolidated slightly in the past few days, and that's come as the euro has begun to find a bit of support. But also just over the weekend, we've seen sterling jump higher again, and that sterling move has come on the back of a few comments out from Mark Carney, where he said that interest rates may begin to rise in the UK even before we start to see real wage growth. Now, that's certainly added a bit of impetus to the hawks today, and the cable price is trading higher. But it just depends on how high that can go, because certainly at the moment cable is in a bit of a bear phase. But I'll talk about that in a second anyway. So in terms of the euro dollar on its on specific levels, you're talking at support at $1.3330, remaining that key low. It's been there for about 2 weeks now, and it continues to form a support. And you've also got some technical indicators that continue to suggest a little bit of strength potentially coming through. So we're looking for a break above that $1.3445 resistance as a bit of a trigger point for that recovery. Certainly the resistance levels after that would be looking at $34.75 and $1.35. So in terms of those levels on cable, as I said, we've got a big 5-week downtrend on cable. And what we're seeing at the moment is a bit of a technical rally within that. But certainly at the moment, it would look as though that there's nothing really more in it than a bit of a technical rally, which is a bear market recovery, whereby you see that the supports come in and maybe it'll just peter out as that big downtrend resistance comes back in. I'm not calling cable as a big selling opportunity. I think that cable is going to be very, very much fluctuating now over the coming months. But I think just in the near term, I see that a rally probably won't go that far. Now, dollar yen remains in this big trading range, big 200 pip trading range between 101 and 103. Just a little bit of a bullish bias within that trading band, which might see a push back towards the highs of the range. But certainly at the moment, it just looks like it's drifting high. It's not showing any real bullish intent for a breakout. Okay, so on to the indices. We're still looking at some nice Wall Street strength, and that's come with one of the best earnings seasons on record, certainly in recent years anyway. So we've seen a really strong rebound in the last few days, continues to pull higher, back up towards that 1950 area. But I think that what the bulls will certainly be looking out for now is a retest of that 1991 key resistance high that we saw a few weeks back. In terms of the DAX, as I said earlier, the DAX is really volatile at the moment. It's flying around all over the place on this geopolitical news out of eastern Ukraine and Russia, and even today it's rebounded 1.5% in early trading. So it continues to be choppy on this basis, but there is a small base pattern in place, and it actually gives us an implied target of 9,490, which could be seen this week, I suppose. Over to the FTSE again, it's got a small base pattern in place. That gives us an implied target of 6,770, and certainly at the moment FTSE continues to be a bit more of a nice conservative rally, far less volatility than the DAX, and it's a little bit of slow and steady gains on the FTSE. Just focusing very quickly on the gold price as well. We've seen gold price pretty much become fairly directionless over the past few weeks. Not really a great deal of guidance from the momentum indicators or the moving averages, and certainly these geopolitical tensions continue to see gold price fluctuating around. But it doesn't really show a great deal of idea of where it's going. You've got a nice support at 1280 and resistance coming in around 1324.50, so it's in a little bit of the mid-range mode at the moment. Okay, so moving on to what we're looking out for the rest of the week. Well, Tuesday is dominated by the inflation figures for UK and US, and inflation is always important for certainly the FX markets anyway. And then moving on to Wednesday, we've got the Bank of England meeting minutes and the Fed meeting minutes. Now, certainly for the Bank of England, it could prove to be that the latest meeting was the first one that we saw a breakdown from the consensus. Someone has potentially broken ranks. If that is the case, it's more than likely to be Martin Wheel, as he is the chief hawk on the MPC. But it'll be interesting to see the reaction on the forex markets if you do see a change from that consensus view of no change. And on Thursday we get the important the important PMI data out for the Eurozone. You've got Eurozone flash PMIs for Germany, for France, but also interestingly China as well. But certainly the focus will be on those Eurozone data, considering the weak growth data that we had out recently. So if the numbers continue to disappoint on those PMIs, then there'll be a lot more talk going into Mario Draghi's speech, a lot more talk of quantitative easing in the Eurozone. And then, as I said, on Friday we finish off the week with those two key speeches from Janet Yellen and Mario Draghi. So lots to go on this week for investors, lots to pull the markets higher and lower, and you need to keep fairly close to your news flow. But I wish you good luck in your trading, and I will speak to you next week. Thank you.